This problem involves three parts. So we're going to be doing the cost of goods manufactured, the cost of goods sold, and the income statement. These three sections are all part of one large problem, and you need to do the sections in the correct order, starting with the cost of goods manufactured, then cost of goods sold, and then income statement. So the problem that we're looking at here is called Victoria Manufacturing Limited, and Victoria Manufacturing makes park benches, and you have in front of you in your problem the data set that pertains to the company. So what I'm going to do to illustrate how to solve the problem is that I'm going to basically take the given information and I'm going to insert it in the schedule in the sections where each element should go. So first of all, we're going to look at our work in process schedule. So we're starting with the first line item, which is our beginning work in process. And you can see from the information that we are given, the beginning work in process is $30,000. So we'll just enter in our $30,000. Then what we want to do, we want to figure out how much materials we have used during the period. And throughout the lectures and in the book, and just even if you happen to be working in this environment, you'll hear the terms direct materials and raw materials. Those two terms tend to be used interchangeably. So we're trying to figure out how much materials we actually used. So the normal way to start this is you would identify how much materials you had at the beginning of the period. So if the beginning of the period, as in this case, is January 1, you would look to see how much in raw materials did I have left over at the end of December. Well, in this particular instance, we're told that we started the period with $50,000. So we'll just enter in 50,000 here. Then we're told that during the period we purchased raw materials of $100,000. So you'll see that's the $100,000. So we'll key in our $100,000 worth of materials purchased. So what this means is we had a total raw materials available for the period of $150,000, comprised of the $50,000 we started with at the beginning of the month. Then we purchased another $100,000. That gives us $150,000. So in order to figure out how much we actually used during the period, we have to subtract what we were left with at the end. So we are told that at the end of the year, you had $80,000 worth of raw materials. So you're going to be entering that in here. And then you subtract the 80,000. So it's 150 minus the 80. That tells you you've used $70,000 worth of raw material. The next piece of information is the direct labor. So there's no calculations required for direct labor. You are just given the amount, it's $90,000, and you enter it in. Now for the next category of costs that make up your manufacturing cost is manufacturing overhead. So manufacturing overhead is comprised of all of the different types of expenses that are required to run your manufacturing operations. So the first one is indirect materials. So indirect materials generally refers to the small items that you need to run your operations. So it could be small nuts and bolts and lubricants, things of that nature. So generally small amounts that you need to run your manufacturing department. So in this case, we're told that our indirect materials are $50,000. So we'll enter in 50,000 here. Then our indirect labor. So these are not the labor costs that are related to actually making it. The indirect labor refers to, for example, your supervisory staff, your cleaning staff, security. So you need to have these people there to run your manufacturing operations. So we're told that indirect labor is $50,000. The next category is insurance. So you have to have insurance on your factory. So in this particular company, they're renting their facility, so they don't have to insure the actual factory. What they're really insuring is the content, so all of the machinery that they have inside of that building. So we're told that our insurance for the factory is $2,000, so we'll enter in $2,000. And we have, of course, the factory rental costs, which is $24,000. The final category for manufacturing overhead are the utilities costs. So this would generally represent your heating and electricity cost. So that amount is $6,000. So now we have identified all of the cost, and we made a little data entry error right here. So instead of 50,000, this should have been 5,000 right here. So now you have all of your cost. You now have all of your costs listed here, all of your indirect overhead, and that is adding up to $87,000. So what you're going to do next is you want to add together the materials that you use during the year, plus your direct labor, plus your overhead. So that is going to, those three will add up to $247,000. So that's the manufacturing cost you've incurred. Plus, at the beginning of the year, you had work in process. So what work in process really means is during the previous month, you were working on making those park benches, but they weren't fully complete at the end of December. So you're carrying forward the partially completed benches along with the cost that you incurred last year. So you're going to finish those this year. So your work in process, $30,000, gets added to the new costs that you incurred during the year of $247,000. So the total work in process is $247,000. You're going to add the $247,000 to the $30,000 to come up with $277,000. So that's your work in process during the year. The next step is, you know that you very rarely finish 100% of the items that you're working on during the year. So you're always going to have some of your products at the end of the year that will be partially complete. So here we're told that our ending work in process is $40,000. So we're going to subtract that from the $277,000. So that gives us a total of $237,000 for cost of goods manufactured.
Let's click that little C in the bottom right for go over. No, the other side. Go see the little C.
Oh.
Click that. See, there's a pause button there.
Yeah.
You can always go there and hit that pause button. And
Okay.
Either way, we can edit this.
Yeah, okay. Yeah, so I made a mistake when I entered that in, but then I went back and corrected it. That's okay.
Then that's fine. So
Yeah.
so yeah, for future, if you need to pause,
Yeah.
click that little C and that'll come up, and then you can hit the pause button.
Oh, okay. Because I was panicked. I knew when I did it, and then I couldn't figure out what to do. Okay.
Are you done with this one? Or are you still gonna? Okay, and if you're done, then you can just hit the stop button or the F10.
Okay, so now I'm going to start up again.
So you can,
Do the next part of this.
it's going to be the same equation.
Yes.
Do you want them as separate videos?
No, I want this all together.
Okay, that's fine. You can just continue here, and I'll make sure I edit it.
Yeah. So do I?
No, you don't have to do anything. You can just click back on Excel and continue.
Okay. So that completes our cost of goods manufactured. So what cost of goods manufactured really means is all of the goods that you completed during the year. This is the total cost related to those items, $237,000. So now the next schedule that we're going to complete is our cost of goods sold. So we want to start off with what goods have we actually finished at the beginning of the period. So typically all of the goods that you make in a year, you're not going to have them all sold at the end of the year. Rarely works like that. So you will typically start off at the beginning of the year with goods that have been finished but have not been sold. So when you're looking at the information that you're given there, you will see that your finished goods at the beginning of the period is $80,000. So we'll enter in $80,000. Then we know that our cost of goods manufactured is $237,000, which we took from here, from our cost of goods manufactured schedule. So the total cost of the goods available for sale is $317,000. But as I just mentioned, we weren't fortunate enough to be able to sell all of those during the course of the year. So you're told in the problem that there was $90,000 worth of goods that were finished but were not sold at the end of the year. So we'll enter in our $90,000. And we want to subtract that 90 from the 317, so that gives us a cost of goods sold of $227,000. So that completes our cost of goods sold schedule. So finally, the whole reason you're doing these two calculations, your cost of goods manufactured and your cost of goods sold, is so that you can prepare your income statement. So that's the next one that we're going to do. So in terms of the sales, so we're going to enter in the sales, and we're told in the problem that the sales are $600,000. And our cost of goods sold, which we've just calculated to be $227,000, we'll enter in that, because what we want to do, we want to subtract from the cost. You have your sales, and you want to know how much those products cost that you sold. So they cost $227,000. This means you have a gross profit of $373,000. However, we're not done just yet. We want to now look at deducting our administrative type of cost. So here we're given two cost categories. So we deduct our marketing cost. Then we also, the next item we deduct is our administration costs, and we're told that's $50,000. So we'll just make sure we put in our little comma here. So we have these costs deducted as well. So that brings us down to a net income of $300 and so what we are going to do now is our income statement. And we are given in the problem that the sales are $600,000. So we'll key that in. Then our cost of goods sold, which we've just calculated here, is $227,000. So that gives us a gross profit of $373,000. So of course, we're not done yet. There are other costs of running the organization. So here we're told that we have marketing cost of $20,000, and we have administration cost of $50,000. So that gives us total marketing administration of $70,000, which you deduct from your gross profit. This will leave you with $303,000 net income for Victoria Manufacturing Limited.